Good to see everybody here today, and hope you were all able to relax a bit over the weekend, touch some grass, so to speak. My bought my son a bike not too long ago, so basically helping him out with the bike. It's his first gear bike, so he's a big kid now. But it was nice to get out. It's nice to get my mind off the charts, get my eyes off the charts, and focus on things that matter, right? I mean, I mentioned this the other day, like trying to create time freedom. I made a post, actually, a quick little post about it. Let me see right here. Yeah, like, I said on Friday, I'm just showing you guys this stuff just so that, you realize you can do all these things too. Get your mind off the chart, hang out, with your, wife, or I should say spouse, or your partner, kids, family, whoever. Just get out, do stuff. Sandy, what's up? I was even watching the Raptor game last night, and that was sad for me because they lost. And I had a feeling they were going to lose anyways, but young team. But, still, I live in Toronto, so you got to support. Anyways, let's get to the charts. Let's get to what's going on. Mike says, you have to take any trade today in the AM? Yeah, and we're going to go over it for sure. Oh, yeah, Harden. Ooh. It's funny, my son was watching it with us too. He really wanted to stay up, and he's like, oh my God, who's that guy with the big beard? I'm like, oh man, you don't know. I realize how old I am because Harden's an OG, man. Anyways, yeah, I love sports. Maybe one day there'll be like a wealth group meet. We'll do like some sort of a sport thing. That'll be a lot of fun. Go see a football game, or I don't know. Maybe Matt will get us a suite. Wishful thinking. Who knows? All right. Anyways, so here's the plan for today, folks. We'll do a market rundown. I'm going to talk about the trades, of course, that I took today. I was posting a lot about that. Then also we're going to talk about bias, just to kind of round out the session. And it's just about showing, a few different ways that you can go about bias. Of course, there's a couple of other ways that come to my mind of how you could do it as well. But I'm not going to focus on those things because I don't operate that way, and I actually don't fully understand them. And I'm probably referring to stuff like GXT or even AM trades or T trades and the way they formulate bias. So I'm not too aligned with that. Not to say it doesn't work. It's just it doesn't work for me. I know it works for other people. But I'm going to focus on these three just because these three have worked well for me and they make sense to me. So anyways, is the topic for today. So let's go to the chart to start. We'll start with let's start with GC, and we'll end with NQ because then I can work ourselves. I can work into the trades. So this morning for for GC, I did have a bullish bias. This is the 6 to 10 a.m. candle right here, and even observing how this closes, you'd think to be bullish, right? Okay. But there's a caveat here, and the caveat is this FVG right here, okay? Now, there's no telling what price is ever going to do, so you have to observe what price is currently doing and where it currently sits at, right? And I had mentioned this in the in my higher time frame bias section. I'd mentioned it right here. I said bias is correct from last week, blah, blah, blah. And then I said, today we can see price action has swept the ERL. Wait, that was from last week. Right here, right? This is what it looked like. But if we move back into the unmitigated portion, so I'm observing that price might move back into that unmitigated portion of the H4 FEG. So that was up here, right? That's what I thought. This is unmitigated, right? Because it's partially mitigated. Now, the thing that was the wild card here is I'm like, there's also a potential H4 bearish FEG forming, and it will confirm at 10. And this could also provide a sufficient target for price to move into and reject from before making another move lower. Now, this is at 843. All I can do is make projections based off of levels and ranges that we believe and know to be higher probability. Whether I know what's going to happen or not is, anyone's guess. Now, if I was trading GC, I'd be very, very cautious about what happens after 10 a.m. because when we look at this now in hindsight, you could see that H4 bearish FEG, which I was talking about confirming its presence at 10, might play a role. And sure enough, it does look like it played a role. So let's go to the 15-minute and just see what really happened here. So 9:30 is about around here, right? So 10 a.m. 10 a.m. is basically this candlestick right here, okay? And that means the next couple of candlesticks within the hour tag that bearish H4 level, okay? And as you can see, price obviously rejects from there. So let's take a look at the 1 minute. And try to understand how we might play this. I'm just going to put on my indicators just so it makes life a little bit easier, faster to observe price action. Okay, there we go. Perfect. So let's take a look at GC. So here's the 1 minute, okay? Now, at 10 a.m., we are still technically bullish, okay? We are only bullish until that H4 FEG gets tagged. So if you're looking for a long, you would need to catch it from down here. I'm just going to hit the replay button and just take it off right up to there. Let's go to the 15 minute and observe what's happening on the 15 minutes. So for that long, right? So if we're looking at this from a long perspective, here's a 15-minute sell side level right there that gets swept. If we go to the 1 minute, we can start to observe what kind of price action we have. So if you're looking for unicorns, right, we're looking for that sweep. If we're looking for unicorns, there is a bullish FEG, there's a bullish breaker block here. We got the unicorn, and you would have had an entry right here, and your TP would have basically been, the daily EQ, in my opinion, or just reaching that higher time frame level of liquidity. So the long position would suffice as long as the higher time frame objective, the drawn liquidity, hasn't been taken yet. So pretty good unicorn today on the 1 minute aligned. And you can see here by using the standard deviations, here's the -2 to -2.5 being well respected. And most importantly, aligned with where the higher time frame liquidity is. We always want to make sure that our TPs are located where the drawn liquidity is, not beyond it. Otherwise, it's going to cause a problem. Okay, so that's the long. Now, you'll also notice the second we get into that H4 bearish FEG, our bias can actually flip. And our bias can actually flip to being bearish. Okay, so if we go to the 15-minute now and observe what's happening here, we can see two things. Number one, there's actually a, what I'll use this tool instead. There's actually you have a bearish FEG right here on the 15-minute. You also have a 15-minute buy side liquidity level. And if we go to the 1 minute, and I'll just adjust the SMT here so that it is in correlation to GC, because GC is correlated with SI. Bam, SMT. Okay, so now you know that there's SMT. You've swept higher time frame buy side liquidity inside of an H4 bearish FEG. We can now flip bearish. Okay, now the question is, where is the breaker block? So here's a high, here's a low. Now this is not technically a new higher high, right? Even though, and this is not obviously a new lower low. So for me personally, you have one of two options. You can start moving up time frames just to clean up the price action, and if you do that, you can start to tell that the breaker block's way cleaner here now, right? So here's our liquidity sweep. And if we just hit next, let's see what happens. Okay, so right there. So right there, we now confirm a bearish FEG. Okay, and if we go to the H4 for 2 seconds, right? 2 seconds. The idea is that we're looking for this low here to get taken out because this candlestick is still unconfirmed. Now, this right here is the 10 to 2 candle. Okay, so we can't mark this off as an H4 drawn liquidity yet. It'd just be this level here. So I just want to point that out quickly. Let's go back to the 1 minute. And actually, I'll go back to the 2 minute. The reason I'm just going to go back to the 2 minute once again was just because the the bearish FEG is way cleaner, right? And as you can see, we get beautiful delivery, and then price literally moving all the way down to the drawn liquidity, which was way down here, right? Now let's just pull up the standard deviations just so we can observe where those levels are. And you know what? I learned this trick from Matt. I learned all about standard deviations through him, where you're measuring the swing point to the breaker block, right? In this case, because this is a short idea, you'd be looking at the lower part of the breaker block, excuse me. And the idea is like all of this up here is consolidation. This is your target 1. If you start getting acceptance below -2.5, you can start to look for those deeper extensions, which is -4 and -4.5. And look, it perfectly aligns with our drawn liquidity. And look at the reaction at this range. Okay, so 2 amazing setups on GC today, both fitting a long and a bearish bias because both actually could play out in the same session. Amazing to see it kind of deliver this way. So that's GC. Let's check out CL. If you have questions, feel free to drop it in the chat. Try to go through this as fast as I can, but still hold on to as much quality as I can. So last week I was looking at CL and I was looking for that move higher. I wanted it to take out that liquidity. It did do that in between that 6 and 10 candle. From there, though, I was looking for a move from ERL to IRL. As you can see, I have that arrow here. Now, whether that happens or not is a whole different story. Let's go to the 50-minute. Once again, we're going to do the same thing. So, like I said, I was looking for a move lower, which means I would have been technically bearish. So if we're looking at this on the 50-minute, though, there's nothing bearish about this, right? At New York Open, we're actually in bullish territory. We're working off bullish POIs. There's a bullish FEG here and here. We have a liquidity sweep here. So if you were going to go counter to that move, which would be the long, you'd be going against what I would say is the higher time frame bias. However, you're going to be bearish. You got to wait for higher time frame 50-minute market structure bearish alignment, right? So we'd be looking for 50-minute buy-side liquidity levels to get taken out. We'd be looking for 50-minute bearish FVGs to get tapped into. But let's start with the idea of going long here, right? What does that look like? So here is a bullish 50-minute FVG. I'm just going to mark both of them. I don't think it hits this one. No, it doesn't. Okay, you know what I'll do is I'll just mark this one. So you got a 50-minute FVG there. You have 50-minute sell side liquidity level, and if we go to the hourly, let's just see what we got there. So this is kind of what it looks like. Let's adjust the SMT to RB. And you can see from here all the way down here, we have SMT with RB. And if we look at that liquidity sweep, because the FVG is one thing, right here is the open. It's already tapped into this. So I would be looking for extra confirmation if I was trying to go long where I want to see a 50-minute sweep. So you do get that 50-minute sweep here. Here's the breaker block on the 1 minute. Now, this is not as clean in terms of the move going through the breaker block. You can see there's some chop here, but we finally do get some movement above it. The play still works out nonetheless, okay, from the bullish perspective. And if we use our standard deviations, right, once again, here was that H4 buy-side liquidity level, which was a key level on the initial sweep. And you can see right here, it reacts off of that -4 and 4.5 level again. So amazing delivery following the similar repeatable, process or steps that we would normally take. Now, the thing is, I said at the start that my bias was bearish because at the time of showing up at the charts, we had swept higher time frame liquidity here. So looking for longs would go against that higher time frame bias. So if you ever do that, just remember, you're taking an added on risk. It doesn't mean you're ever going to see things like this happen. And with the news, I'll show you the news, we never know what's going to happen, right? The news today, actually, you know what I'll do is I'll show from here. Day trading. Yeah, right here. So like this morning at 7:47, there's news saying 2 missiles hit a warship, and then, a little bit later, it's the U.S. says it wasn't Iran. So like, who's telling the truth? Who's lying? But this moved the markets massively today. Okay, so there's no telling what's ever going to happen. All we know though is bearish news, bearish news fundamentally, meaning pro-war, is very good for oil, very, very bad for NQ and any sort of risk-on asset for the most part. So if I was looking for alignment though, let's just take a quick look at that. Now, the problem with this is within that time window that we have to take that trade, okay, if I was saying my time window ends at 11, basically no major sweeps happen in between that New York kill zone, like in that window. So what does that mean? That means if you didn't take that long, you just have to do nothing, right? If you're looking for that alignment. So I just wanted to put that there, okay? Let's end off with NQ. Today for NQ, I mean, this was a wild morning because we got that news. Tapping into an H4 bullish FEG. I was bullish today, so I wanted to see price move from this FEG and basically go for new all-time highs, right? That's internal to external in a nutshell. Look at the buyback, right? Because the uncertainty with the news about who's telling the truth. The news is bearish, and then all of a sudden the news is bullish. Who's lying? Who's telling the truth? We never know. Let's go to the 15-minute. Maybe there's something aligned here for us. And let me just turn that off for a sec. So here's 9:30. I am bullish. But at open, you can see price is not moving into anything bullish. It's actually doing like what CL did. It was moving into the opposing kind of territory, right? Because with CL, I wanted to be bearish on the H4. And with NQ, I want to be bullish. But NQ is moving into bearish territory here, not bullish territory in terms of like alignment. And then by the time price starts to sweep aligned 50-minute market structure, we're outside of the kill zone window. So what do we do in those situations? If you're using these types of alignments, you can't do anything, right? You're kind of stuck just having to wait. Now, if you're looking for that short on the other side of this, right, there is a 50-minute level here. And once again, you're going against the bias, right? But just to show you, you have that that 50-minute buy side liquidity level. And then this is how the market was opening, eh? Just pure chop. Like, you cannot do anything with this. I'm not sure if anyone took a trade within there. I think maybe someone did. But to me, like, trading in here is very risky. Like, I would never do something like that with funded accounts. I think if I were to even consider taking some sort of a risk in here, it would be because I'd be taking on eval, but I would never do this on a funded personally. I used to, have FOMO and take these kinds of risky setups, and sometimes it was good and most times it was bad. But I've just learned from my own personal mistakes. Just when I see this and I'm not hitting levels of interest, I can't do anything. You should not do anything. I had mentioned this actually in our chat today. Where is it? Right here. Important to just sit on your hands when the market's choppy and wait, set alerts, and do something else. And this was at 9, basically around the open, right? Around 9:45. You cannot do anything, in my opinion. You got to just wait, because to me, there's just no setup there. Now, if you were trying to go bearish, okay, you can see we get that sweep here on the 50-minute. If you're trying to align some sort of a unicorn here, I mean, I don't really see anything nice here, like clean. So, I mean, you could move up time frames just to see if there's anything cleaner. Right? So something like this, for example, now you have a high, you have a low, you have a high, you have a higher low, you have a higher high, you have a higher low, and then you have price sweeping liquidity. So if you're looking at this in terms of like a unicorn, you could use this as your breaker block, right? The thing is there a valid setup here? And what's really interesting about this is there is. So here's your liquidity sweep right here. Okay, you know we have the breaker block here. Right here, this small little sliver of an FEG would count as your, unicorn confirmation, right? So then this candlestick closes below at 11:12, and then the next candlestick that opens at 11:15 tags your entry right there, right? Tags you right there. And then if we're looking for alignments, it's the same stuff, right? You're just going to measure the high to the low of the breaker block, and you're going to look for those extensions and see where price leads. And as you can see, price moves right into the -2, -2.5 standard deviations. You're getting some respect off that level. You get a sweep, but it still reclaims that box, right here. And then price has moved higher. So pretty interesting stuff. If you are, now that was the bearish side, right? And I'll show you my short in a sec. I just want to quickly go back to one thing. Let me just get rid of that. So if we're looking to long, right, and you're on the H4 and you had that bullish bias. So if you're someone who's trading within the window, then you obviously couldn't do anything because price closed outside that window. If you have more leeway, maybe you're waiting till 12:30, just given because of how weird price is moving. What that means is then you're waiting for a 15-minute level to get swept, right? We want to see that alignment. So we know that there's a 50-minute down here. We also know that there was a level here. And then we also have a slight bullish FEG here. So let's just go to the 1 minute for a sec and just analyze what happened at what happened at those levels at a specific time. So right here is where we get that sweep of that first 50-minute sell side liquidity level, and you can see nothing's really working here, right? Like there's nothing to work with, unicorn wise. If we go down to the next level though, inside of that H4 FEG, you can start to see now that we are starting to see things that are of interest to us. So what are those things of interest to us? And I'm just gonna pull up, just get rid of this. Okay, so as price sweeps this level, I often talk about the three types of reversal patterns you're gonna find at higher time frame key levels. Does anybody know what those three are? It's a pretty easy question. Anybody? What three types of reversals do we see? The actual pattern itself, not the time frame. What types of patterns do we typically see at these levels or these ranges? There's three of them. If you don't know what they are, go to my trading IQ section and scroll all the way up until you get to this part right here. Three key reversal patterns you'll see. We have our breaker block in unicorn. We have swing failure patterns, which usually means that there could be a correlated SMT with a correlated asset. So with NQ, it would be ES. With GC, it would be SI. And with CL, it would be RB. And then the other type is the IFEG, right, where we want to see a nice clean V shape, right? So if you don't know, I have it here. You can save this and keep it with you. But if we go back to the chart now, there's two things that we see here, okay? I'm just going to remove this for 2 seconds. There's two things we see. The first thing is we have a bullish FEG forming here, right? And the second thing we're seeing is a swing failure pattern. Now, when we have a swing failure pattern, it's important, like I just said, you see that forming, double check what ES is doing, okay? I have an indicator. It shows me SMT. Now, I'm not sure if there was SMT at the bottom here. And if there isn't, that's cool. It's just, like I said, it's just something to help tip us off, right? Sometimes there is, sometimes there isn't. Now, I have the indicator on and it's not showing that there's any SMT here. If I go to ES just to double check, you can see it's also making a higher low. You could also use YM if you absolutely wanted to, just to see. But in this case, it looks like all three assets are moving the exact same way, okay? So you do have a swing failure pattern, you do have an IFEG, but you do not have SMT at this range. And if I go to the 50-minute, just to double check if it was inside of a 50-minute FEG, and it looks like it was. And you'll recall me saying this last week with the setup of trying to get, excuse me, one sec, trying to get continuation plays. Okay, now this is not a continuation play. This is a reversal play. This is using H4 50-minute and 1-minute alignments, right? So if I was looking at it from that perspective, there's no real unicorn for me to use, right? Because the breaker block's way too high. If I start moving up time frames, we do start getting cleaner price action here, right? Like you could say this is a breaker block. It is pretty high up. And don't worry about the daily EQ because that's something completely different with this type of setup. But this is the highest up closing candles, series of candles before the leg down that takes liquidity. So we have an IFEG, we have a swing failure pattern, and technically, if this confirms, we would have we'd have a bullish FEG, or sorry, we'd have a bullish unicorn. So let's just hit play. You can see the IFEG getting respected, right? And you can see here, the unicorn does confirm. It's hella messy. You might even want to move up to 5-minute time frames, but keep in mind, we are way outside the kill zone here, right? And this is where I like to use things like, if you're going to take risky setups like this is where like IFEGs can really play a good role because you can get in early and get out early. And you don't have to really wait too long for price action to move to get to, say, like a 1R. So, for example, right here, let me get rid of this breaker block for a second. For example, right here, you would have your entry here. If you want to have a tight stop loss, there's a couple ways you can do it. You could use this candlestick right here. You could use the low of that candle. You could even use the body of the candle before or of the same candlestick right here, right? So it'd be like a couple of points below. And then of course the more, I don't want to say safe approach. It's just you could say it's protected. You would have your stop loss way down here. But look at that, 91.75 points. That's not ideal. So for me personally, something under 50 points would be ideal in this situation, but only because of the size of the candlesticks. But here's the thing. Let's go to 1R for a sec and show you where 1R is. So this is 1R right here, right? Price moved up aggressively at this point. Given that it's lunchtime, you might even take profits early. Who knows, right? Bobby says, I love the IFEG entry. In fact, I just closed the IFEG trade on the 5-minute ES in profit. Yeah, so you read it very, very well. It's basically similar to this. And this is the 5-minute that you're looking at, right? So you can see the 5 minutes super clean. Now, I'm going to be straight up with you guys. I personally do not take trades on the 5-minute anymore, no matter what. It's got to be between the 1 and the 3. The reason I'm doing this, I've been doing this for a while, is because my track record in terms of those 5-minute entries have been horrible. I have more losses than wins from my data that I've taken in terms of those types of setups on that time frame. So I've specifically strictly moved to 1 to 3 minute and just kept it there. So even though the 5 looks so good, like I said, this has happened to me before where the 5s look so amazing and I've taken it and then it just like doesn't work. And I'm like, I don't know, man, that sucks. Because usually a trade like that clean with that type of price delivery is going to work. And my track record shows with when I trade on the 1 to 3 minute, it does do that. The win rate's super, super high. So this is a big reason why I personally don't. It's not to say you don't have to or anything like that. It's just telling you what I do. But great trade nonetheless. Good job, Bobby. Glad to see that you're able to put all that together and read the price action. And that's the beauty of trading ICT is like we have the foundation to trade or to understand core concepts of ICT market structure. All this, what's going on, brother? So when we start to just kind of fine tune it with IFEGs and really understanding what's happening with price action immediately at these key levels, it's much easier for us to kind of digest those types of things, like a reversal pattern, for example. So some of you might find it super easy moving to an IFEG, whereas some of you might not. It just depends, I think, in your journey. It depends on your comfortability because things move super, super fast with IFEGs. Today I took a trade on the 1 minute, and we're going to talk about that right now. Anyways, I'll just close this off. This is NQ. This is the afternoon lunchtime session setup that finally plays out, that delivery in terms of looking for that aligned long. Okay, so that's the market rundown for today. Second thing to talk about are the short trades from today that I took on NQ. Let me go back to Now, if you're not following my daily trading thread right here, you can just hit the follow button somewhere at the top here. Right here, it'll say like follow. You just click it, follow it. The reason I say follow is because anytime I post, it's going to populate like a highlight in your menu on the left. And if you have notifications just set to like all messages, because I don't have like an at type feature yet. Maybe I should get that from Nate. So if you put it to like all, you're going to get notifications on everything. But I apologize because I post like crazy in here. So, it's going to be hella annoying for you. I can understand that. So what I'm going to do is get a tag set so I can set tags up. And then that way, if you just hit notifications to like if I have it like at Trader Kira or at Kira, anytime that alert kind of like I put that tag in there, you'll get alerted. And it'll only be on like the more important things, not so much on my ramble. Because like I said, I have so many thoughts that go through my head during a trading day. And when that happens, I basically dump it all here, no matter what. Even if it's like something funny, right? Like today with all the news, and I love this meme, but like, I'll post shit like this too, because I'm like, it's in my head. I got to get it out. And also have a laugh. I think with trading, we got to have some fun with this thing too. It can't be so serious all the time. Even though I know we have to be serious, we got to focus. In between those moments where we need to like buckle down, I like to have fun. So, but like I said, I'm posting all types of stuff here. I told you guys at the start, like there's only a couple of areas of interest for me right now. And I'll show you this in where did I post it? So today I posted it in so every day I do bias. I also do my check-in for the 28 plus trade challenge. I would highly recommend just to click on it and take a look at what I got, because it'll usually show you before the market opens what's going on in my head. What are the levels that I'm looking for? And the reason I would say to look at it is that if you're trying to like, compare notes, maybe just to see what I'm doing compared to what you're doing, it could be healthy. If you're actually still just learning 100%, it's of course valuable, because it's going to start teaching you how to identify which levels are of importance. So this is basically what I was looking for in the morning, right? 8:47 in the morning. I'm like, well, there's clear liquidity up here on the buy side, and there's clear liquidity on the sell side here, but it's distance quite far, right? Especially the stuff on the sell side. So to me, I thought shorting is the best option today. We're above the daily EQ. We'll talk about the buy stuff in a sec. But I was either looking for a, tag of the daily EQ to go long, or I was looking for sweeps of buy side liquidity up here. So London high, the previous all-time high, and there's also an H1 level here, right? So at 8:47, I already know what the plan is. I know what I'm going to do. Now I have to just execute. And what does that look like? Well, what that means is you got to just wait, right? You got to wait. So at 9:45, this is what the market looked like. And I'm still waiting for higher time frame liquidity to get swept. So I marked off these levels and I say, hey, I'm still looking for this, right? The plan hasn't changed, okay? I also said, look at the daily EQ. Look at the way it's being respected. This is telling us that there's a very good chance we're going higher first, not lower. Because if we're going to go lower, we would have started to see some acceptance, especially during New York Open, I would think. But because it was holding, and you look at all these wicks here, right? I was just anticipating buy-side liquidity to get swept. So until that happened, had to wait, right? Another thing is, like, look at the way this H4 candle was bought up. Once again, supporting a move higher on the lower time frame, in my opinion. And then, of course, why did we get such sluggish price action this morning? Whether this is the case or not, I don't know. I'm just trying to find reasons. Someone had mentioned they were not trading till Thursday because of holidays in Japan. I remember someone had also said that they're not trading on Monday because it's a bank holiday in the UK. So I kind of like remembered it. And sure enough, there is 3 bank holidays. And we know that there's an overlap in our market session with England, right? With the UK. So when you don't have that amount of liquidity in the pot, it's taken out of the pot, which means we're going to be dealing with lower levels of volume today. Okay, so let's go down here now. So I mentioned here at 10:31, still waiting for levels to get swept. Now, the reason I'm going to talk about this quickly is when both assets are moving towards higher time frame liquidity, if one of them sweeps and the other doesn't, as we all know, that creates some form of divergence, right? So SMT divergence. For me personally, though, I hate taking trades on NQ when NQ isn't the one doing the sweep. It really bothers me, and I've kind of had to sometimes miss trades. Sometimes I have FOMO and I do take the trade, even though it hasn't swept and ES has. But ideally, my goal is to see NQ run the sweep and not ES, okay? So given how today was playing out, ES manages to sweep first. And you can start to see on the right here that it's starting to create an IFEG. Now, I had mentioned here and said, I really hate longing or shorting when NQ is weaker, stronger pair. It doesn't sweep the higher time frame liquidity. And I said, I want to see something clean. So I'm telling you, and I'm telling myself by doing this, like exactly what I've been looking for since 8:45 in the morning. This is what I want to see. I still haven't seen it. Okay. And I also said, because we're all independent traders here, I said, hey, if you, because I don't want to hold anyone back if you are following me, and it could go in your way, it could go against you. I would just tell you what I'm doing. But I said, if you want to take a short on ES, if it sets up, it's up to you, trader's choice. But I said, I will wait for NQ. Okay? I will wait for NQ. I'm not going to take any chances today. So then we finally get the sweep on NQ. Okay? And what does it look like? So this is what it looks like on the 3-minute. Now I'm just going to go to the chart and we'll go back to this. Let me just get rid of all the stuff here. Let's go back here. And I'm just going to walk you through my process, because today was a bit of a messy trade. And it did work out, but it wasn't initially clean. I had to chase or front run my entry. So I'm just going to, because we know it was an H1 sell side liquidity, or sorry, buy side liquidity level that got swept. Okay, so this is what it looked like. So we're still inside of that kill zone, which to me is about 11-ish or so, 11:30. We finally get that sweep. We know ES has also made the sweep. We're getting close to London high. I don't know what's going to happen here. Now, when you're looking at this, to me, this is not valid. Any of these IFEGs or FEGs to be turned into an IFEG, to me, is not valid. So when that happens, I need to move up to the 2-minute time frame. Okay? So I move up to the 2-minute time frame, and given the size of the candles and also the size of this IFEG, let's just go to it for a sec. So this is about 6 points, right? 6-point IFEG. And then we also have the 3-minute starting to form. Okay, right there. So here's the 3-minute. Now the 3-minute is about 10.5 points. Okay. And given the way price is moving, the only reason why I would say maybe to look at the 3-minute over the 2-minute is just because we're so deep into the kill zone. London high is right here. The previous all-time high is right here. You really want to have confirmations before doing anything. Okay, so that was my mindset, was just having extra confirmation. Another thing I did on the 2-minute, which you could also do, is I just marked off where that 2-minute IFEG was. I'll just do this just so we can. So I had 2-minute IFEG. And then we'll go back to the 3-minute, okay? So the reason I put this on my chart is because as price starts to now move lower, I can start to understand if this level is going to get closed on a lower time frame before the 3-minute actually confirms. Because when you're on the 3-minute, like front running is a pain in the ass. It's way easier to front run on a 1-minute or 2-minute. 3-minute gets so hard. And I typically actually even say, don't front run 3-minute entries or 2-minute entries. Wait for confirmation. Now, I just want to show you one thing. Okay, so here we go. Here's the setup. I was saying right here, keep an eye on this, right? 3-minute, telling you guys 2-minute or 3-minute look interesting. This is at 10:42. This is at 10:52. I'm literally showing you the setup. Okay, so if you practice how to do this, because I can't hold your hand while you do this yourself. All I can do is show you what I'm doing, show you the setup. You yourself have to practice getting familiar with how to do this. And it takes practice, unfortunately, right? Like you can't just copy. But what I'm trying to do is at least show you in real time the setup before it happens. So it's good sized, it's singular. These are all the things we want to see, right? Higher time frame liquidity sweep. We're inside, premium and discount on the proper side. We're above the daily Q. There's a good, obviously the IVG has a good size. I also say about singular versus non-singular. When you're looking at the drawn liquidity, look at all this liquidity here, right? All this bearish liquidity here. LRLR, look, actually extends all the way down here. So much liquidity to get swept. This is the most perfect scenario when you have a setup is you want to have a single FVG, which will be flipped into an IFVG, and then price will just have an opportunity to just nuke and liquidate all of the liquidity over here, all the resting liquidity. If these were all FVGs, like imbalances, like kind of spiking, the thing is it's less interesting because you just don't know which imbalance price is going to reverse from. And sure, you could say, well, that's the same with these, these lows here. But one thing we know about gradual trend, higher lows, is that there's like so much resting liquidity all below here because people are going long here, setting the stop loss right below, right? And then price goes higher. Someone takes a long here. Where are they setting their stop loss? Right below the swing points. Do it again, right below the swing points, and watch what happens. Nuke, right? Clear nuke, taking out the liquidity, okay? So let's just go back for a sec because that was my point there. Let's just go back to this. Okay, so we were talking about 2 minute versus 3 minute. So the 3 minutes right here, the 2 minutes right here. Let's just go to the 2 minute for a sec. So at 10:56, you have a candle closure below here, okay? So for me, the way I rock these 3 minute setups is I'm observing what's happening on the 1 minute and the 2 minute very, very carefully. Because I want to start seeing closures on those time frames, even though I'm like measuring the setup on the 3 minute. So I'm not taking this trade based off the 1 minute, but I'm observing what the 1 minute and the 2 minute are doing to the IFVGs that are in like question. Okay. So 1 minute, we already knew we're not taking a trade off the 1 minute. But let's hit next. So we know that the price closed here, right? At 10:56, price closes on the 1 minute below the 2 minute IFVG. If we go to the 2 minute, we can see that it actually closes below the 2 minute IFVG at that same time. So now when I saw that, and you got to remember, like I can't post about these things in real time. It's moving way too fast. But I'm trying to explain this to you guys so that when you go back and start studying or you start looking at price action in real time, you have a much easier way to kind of understand what to look for, because I'm showing you what I'm looking for. And this is recorded, so you can go back and rewatch this as much as you want, just given that there's no sort of glitches that occur in the recording. Okay, so let's just hit next. Okay, so now let's go to the 3 minute for a sec, okay? Because on the 3 minute, at that same candlestick, right, that 10:54, 10:56, at 10:56, that candle had closed below the 2 minute. But on the 3 minute, price didn't confirm. So this is where you have to be very careful. In this situation, I actually played it off the idea that I know the 2 minute had closed. And when I was on the 3 minute, honestly, I swear to God, I thought this thing was closing. So within the last 20 seconds of the 3 minute candlestick, when price was kind of around here, I thought for sure it's closing because the 1 minute and the 2 minute had confirmed on the same candlestick, right? That the 2 minute was valid. So I just market ordered in. And I just took a slight gamble that this was going to close. And guess what? It didn't close below the 3 minute IFVG level. It closed above it. Okay? But remember, I'm using the 2 minute. I'm using the 2 minute and the 1 minute to gauge that interest and that confirmation. And the thing I'll tell you about trading, this is intuition, what I did today. And what probably other traders did too if they took the same setup, if they're using kind of same or similar types of parameters. If I was to do a more mechanical approach to this, okay, let me show you what I mean. So Let me hit next. So here's the 3 minute, and then let me go like this. Okay, so if I was to be mechanical about this, it's not to say the setups don't work. It's just I'm trying to get the best freaking entry I can get. Okay, that means I want to get as close of an entry to the FEG or the IFEG as possible so that my TP can get taken very quickly. Okay, now you'll notice that the IFEG indicator here is saying, here's your confirmation, right? So just to show you something. So even if I did take this, let's say my stop loss goes above here, just given because of how wild these candles are, I would probably want to have like a higher stop loss, or maybe you just want to kind of keep it a little bit tighter. You could keep it, say, like right here, and then you'd be looking for a TP down there, right? Trade still worked. Okay, so even on a mechanical side, it still worked, even though it looked like this was missed. So it was nice to see that happen, but I just want to go back again and just show you that from my trade looked like this. So here's the 3 minute. I entered around here, price closed back above, and then because I'm using limit orders on my trades, especially for TP, because I want to get that 1R. I don't want to like mess around. This thing hit in about 1 minute. I think my trade time was 1 minute, 15 seconds, maybe 1 minute, something like that. It happened so fast. I couldn't believe it. Okay. It happened so quickly. So that was my setup today that was my first trade that I took. It was a funded trade. There's the TP. It's the same area of interest. And then seeing all the bearish news starting to help the trade, even though I don't want to see bearish news because, obviously who wants to see war, right? No one wants to see war. But I kept watching the chart because I couldn't help but notice that the 3 minute had confirmed right here. Okay, now let me just get rid of the 2 minute. Let me get rid of this. Let me get rid of this. Okay, so we know we have the confirmation. One second. Let's try this again. Okay, so we got that confirmation here. So the thing I couldn't shake was that I knew that the 3 minute was good. There's still so much liquidity here, and as we all know, I always talk about the daily EQ being a valid support and resistance level. And I thought, hey, never tagged it yet. What are the odds that this thing just keeps dumping? So what I did was I quickly moved to an eval that I'm working with, and I thought if I can start seeing price move back below here, I'll instantly get back into position, right? So we get one of these. So now I'm back in position right here, and my goal is literally just, once again, 1R. I'm just looking for 1R trades. I'm looking for that move to go lower. I already have my drawn liquidity. It's still the same drawn liquidity. And per the indicator, it actually still never reached its targets. So I thought, this is still an open trade. And we're seeing respect off of that bearish FEG inside of a bearish, the bearish IFEG, and price is respecting the bearish FEG up here, right? I'll show it to you like this. And you might say, well, that's a lot of things to think about in real time. Like, how would you, as a trader, think about all of these little things happening so quickly? The only thing I can say to you is it's just experience. And you have to train your eyes to observe only the things that matter. You don't need to observe a million things. You don't need to observe a handful of indicators that, one tells you this, one tells you that. Don't have to do that. I'm literally just looking at very, very basic things, right? Is the liquidity still available? Is price respecting those bearish POIs, right? The IFEG and the FEG itself that price retraces back into. If it is, and I see momentum now rolling back over, I should jump into this trade. And sure enough, I did. 1R was set, and then TP is hit. Now, this went significantly deeper, right? The thing with taking 1R trades is you have to accept the reality that you're going to have situations like this happen where you can't kick yourself for not holding the trade longer, okay? If you are a 1R trader. Now, in my opinion, trading IFEGs with 1R as your fixed TP should give you somewhere in the 70s, maybe low 80s win rate. For me personally, it's usually hovering between 75 and 80% win rate if I take 1R. And the reason that is because if you start looking for 2R or 3R, it drastically drops your win rate percentage to about 62 or 64%. And then if you're taking it on with like 3R, it goes down to like 40%. Okay, so that's if you're just taking, if we're just looking at the levels in terms of price moving from here to there, right? Now, if you're someone that's going to skim profits, it's a very different story, right? You're playing a different game at that point. And when you're skimming profits, you have to manage it more attentively. You can't just let it sit. Not to say that I let it sit, but you have to really be in the trade for a lot longer. And the other thing too is there's an art to doing it, meaning your stop loss has to be positioned at a very, very good level. So like, let's just say, you did take this trade and your stop loss is like 58.75 points. Let's just say you took a very moderate stab here, right? So if you get to 1R and let's say you risk $250. So if you take full TP at 1R, that's $250, right? But here's the thing. If you're skimming profits and let's say you take 50% off here, right? You're no longer getting $250. You're now getting $125. And now you have 50% left. So what that means is one of two things. If price goes lower like this, then sure, you can keep skimming profits as price goes lower, right? At specific, levels of liquidity. Fine. That's going to increase your $125 profitability to now probably pushing it around $250, maybe higher. It could be $3. If you were to, catch a whole full extension, maybe it's $500. I don't know. Okay? But my point is this. How often is that going to happen? That's the question I would ask you. How often is that going to happen over the long term? So when I first started trying to skim profits, what I noticed was that when I reviewed month over month from my own testing, what I noticed was like it's much easier for me to just take full TP at 1R because the win rate's higher, which is perfect for my psychology and my mindset. I need a higher win rate to make me feel confident, to make me feel like, in control of my emotions and myself. And once again, the confidence side. Number two, when I measured the profit that, I had from skimming versus the profit I had from just taking 1R, honestly, to me, it just really wasn't that much more in the sense of me saying, like, it's worth it. Like, was it worth the stress? Was it worth it? Because, like, the worst thing that can happen to me is I take 50% off here and then price goes all the way back against me. And it's like, man, I just left $125 on the table if I had taken a $250 risk, right? So it's a double-edged sword. One way is not better than the other way. You yourself as a trader have to figure out which way works best for you and what works best for your trading IQ and your trading personality. For me personally, 1R has been the biggest blessing I've ever had because I'm in and out of trades so fast. I don't really feel stressed out because I'm risking, let's say I'm risking $300. Like, to be in a trade that lasted a minute and to make $300, that's amazing. That's amazing. Like, what job can give you that type of a pay? $300 win in 1 minute. Honestly, think about that. Think about how much people have, like, how much time you would have to work in a full-time job to make $300. And if you're someone that's thinking like that's not good enough, you gotta check yourself before you wreck yourself. If you know, you know. Okay? The other side to this, too, is not just $300. Can anyone tell me why it's not just $300? Can anyone tell me why it's not just $300? Nobody? Why is it not $300? Exactly, Bobby. Bing, bing, bing. Copy trading, guys. Copy trading. Iman, what's up, brother? Iman, congrats on the payout, bro. Good job. Hell yeah. Exactly, Bobby. You nailed it, man. Copy trading. We're taking base hits through copy traded accounts. You're using those copy traded accounts to increase your leverage. You're trading the same thing, the same way. Think of trading just on one account. That's all you're doing, but you're increasing your leverage through copy trading. So that 1 minute $300 trade is no longer just a $300 trade, right? Now, I'm not saying like everyone has, a handful of copy traded accounts. You got to work up to that, right? It takes time. It takes the mental health to do it, right? Exactly, Iman, you just mentioned it, man. Mentally, it's tougher copy trading. It's a question he asked. Because if you take a loss, then it's on multiple accounts, right? Exactly. Bobby also has quoted Mr. Zink, he's goated in his own right. You're scaling horizontally instead of vertically. So I would say, Iman, to your question, when you said mentally, isn't it tougher to copy trade? And that's where the psychology piece comes in, right? If you as a trader are not able to copy trade 2 accounts, then you have no business having 2 accounts. Stick on 1 account. Slowly start to scale. Exactly like Mr. Zink said, which Bobby has quoted. You got to scale horizontally instead of vertically. And the only reason I also say this too is because I did this before in the past, and I had like 6 to 10 funded accounts with Apex, and I was not prepared to trade 6 to 10 accounts because my psychology when I took a loss, it wasn't like I took a $200. I'm just gonna throw a random number, a $200 loss. To me it was like I took like over $1,000 loss, and then what does that do for your psyche if you're not able to like work through that? You got to scale down, slow down. Okay. So when you're at a point now where you're able to just execute properly without worrying so much about the wins and the losses, you're more concerned about, did I execute my plan A+? Did I do that? If I did and I lost, so be it. If I win and I did it, I deserve a pat on the back. Because I did everything I was supposed to do and I got rewarded for doing it. And when you get to that point, then when you're starting to copy trade 2 accounts, 5 accounts, 10 accounts, 20 accounts. I know there's traders I follow that have almost like 37 accounts maybe. Can you imagine a $300 trade across 37 accounts? $11,000. I have a calculator here. I'm not just some sort of brainiac. $11,000 in 1 minute. Now tell me 1 hour doesn't make sense. Tell me 1 hour doesn't make sense. Okay, sorry. I'm just going to go back to the chat, make sure I haven't missed anything. Iman says copy trading brings back bad memories. PTSD, eh? All right. If you're in a streak of bad trades, is it really the price and the market making you lose, or is it you? It's probably you. Happy Will says it helps to journal 1 account instead of all your accounts. Helps the stress of a big loss and overconfidence from a big win. Exactly. A good point I'll take out of that is it's so important for us to stay neutral. Right? Like, yeah, I know we're going to be excited and have euphoria when we win. We're going to be pissed off when we lose. But we got to try to keep ourselves at like equilibrium, right? Like, you got to keep ourselves calm, cool, collected. Lavu says, what's your time frame alignment taking that sell? Well, I'm not sure when you joined the chat, but I had mentioned how I set the trade up. I always set my trades up on the 1 minute. I'll start with that, and I'll just kind of reiterate. I always start my trades on the 1 minute. The problem is if the 1 minute starts to look like this, let me just hit rewind just so you can see what I'm seeing in real time. Okay, let's just take that off, and we'll take this off. So if the 1 minute is looking like this, then what happens is I'm going to have to move up to a higher time frame. So I'll move up to the 2 minute. And when I move up to the 2 minute, I now have a singular setup. FVG is not too big. It's about 6 points. It's still within that range that I like, above 5 points. But what I'll then do is I'll start to look also at the 3 minute, because maybe there's a FEG that's bigger, and this one was. Okay, so that's why then I marked both FEGs, the 2 minute and the 3 minute, and I observed what price was doing on the 2 minute as it moved through here. Okay, now what you'll notice on the 1 minute, actually let me show it to you like this. So here is the 2 minute setup, and then here is the 3 minute setup. I'll just make this a little bit longer. I'll make this one white. I'll do it like that. So if I go to the 1 minute, okay, if I go to the 1 minute, you know what, this line's driving me nuts. Let's make it okay, so if we look at the 1 minute, right, here's this bigger red space here, or range, is the 3 minute FEG. That's going to become an IFEG, and this small little guy right here is the 2 minute. The 1 minute closes below the 2 minute, but the 2 minute actually confirms on the next candle. I entered on this candlestick because this candlestick was also way down here, and I was looking at it on the 1 and 3 minute, and I was confirming it on the 2 minute. Like, I wanted to see at least the 2 minute gap get confirmed, because remember, the 2 minute was still a valid setup, but I wanted to take that extra bit of precaution with the 3 minute, because it was a little bit bigger in size and it was a little lower given the way price was moving, right? I actually front run the 3 minute because I saw the 1 minute close below the 2 minute. And like I said, when I entered in the last 20 seconds of the 3 minute candlestick, which is this candlestick here, because it's a 1 minute, price was around here. So I thought for sure this thing's closing, right? And of course it didn't close. This candlestick ended up getting bought back up. I had no clue that the next couple of candlesticks would hit me to TP, right? That's the thing. You never know what price is going to do. Sometimes you get rewarded like that. So just to answer your question, that's kind of how I use the time frames in a nutshell. All right. Okay, perfect. So yeah, that was the NQ trades from today. That was the first setup, which was this one, which was funded. And then, like I said, the second setup was just a re-entry because I just felt like this trade still had momentum to roll, given that the news is so bullish. And I mean, let's just take a look at this for a second, right? I mean, there's just so much. Even now, 12:53, Iran will be blown off if it attacks U.S. ships. There's nothing bullish about today, even though the market structure that I wanted was bullish. Like, the news is just horrendously bearish. Let me go back here, and I think what caused the price to go down was that UAE said that they got hit, and their missile defense systems were going off, even though Iran's saying that, you know, they've done nothing, right? So there's clearly a lot of bullshit going on here, right? I mean, U.S. says one thing, Iran says another thing. I mean, this is war, and unfortunately with war is that it turns into fake news now. We have to deal with fake news. We don't know who's telling the truth, right? Which makes me laugh because I go back to, you know, the beginning of the day, and it's like this. Best place to trade is the Strait of Hormuz. Charts are getting confusing, so I came here myself. Now my entry depends on ships, not candles. I just can't keep going back to this. It's so funny. The only way we're going to know the truth is if we're actually sitting there with our desk, trading away. Anyways, yeah. So let's go back to the chart, and that was the setups for today. I don't know what's happening right now. I'm kind of interested to see, and then we'll quickly talk about bias and stuff like that. So I'm just going to take a quick peek. All right, so currently inside of a bearish 1 hour FVG, 4 hours being respected. So you remember I said the bullish bias was primarily because of this. This is the only reason I was bullish today from a higher time frame, which is because of this. And now the 10 to 2 candlestick has closed like this. So if you have a 50-minute time frame, right here was that same sweep at 12. But let's just say you're still maintaining the idea of being bullish, okay? What we actually need to see is price dip back into something like here. And this goes with that continuation setup idea, right? Whereas we got a 15-minute FVG now lined up. We would want to see price dip in here. We'd want to see SMT form with ES and then maybe an IFEG or a unicorn, and then maybe try to take another long. If price gives it, it gives it. Of course, remember, like we're inside the New York PM now, and price could just keep going higher, right? There's no way to tell. And if it goes higher, it's presumably going to start creating higher bullish POIs that may come of interest to us. It could be a swing point. It could be an FVG. There's no telling, right? And the only time will tell, and price will give us what it will give us. So anyone have any other questions about anything I've talked about so far today? And, I just want to I just want to say this again, and thank you so much for being here today. I really, really appreciate you guys' time. My goal is just, once again, always to help, share ideas, share information, showcase indicators I like to use. Everyone knows I like to use the IFEG Pro Plus indicator by 2 degrees. Like, I love using indicators that make my life easier on the chart, but I also think it's so important that you know how to understand how to read the chart without indicators first. Use the indicators, like I said, to make your life easy, but it has to be structured around like full knowing and understanding of what you're doing. And yes, you can use the indicators to learn and grow with, no doubt, 100%. I did that with the IFEG Pro Plus indicator. Like I used it as a starting point. There's nothing wrong with that. There's other indicators too, right? Like stat map or anything. It could even be this free indicator here with the ICT kill zones and pivots, right? Like I used to mark these lines by myself, and then I realized there's an indicator for it, right? So it just depends on where you are. For me personally, if I have a blank chart, I can still do it. It just take me longer. If I have indicators on my chart, of course I can still do it. It's going to just make my life so much easier. And that's the point. Once you have the understanding of how to do things, and then you start using indicators to help you, it's going to just make your whole process more efficient, which will hopefully then make you become way more profitable and less stressed out while you're doing it. And that's kind of where I feel like I'm at in my life now with trading, is that I have what I have. I know what I like. I don't need to add anything more. I don't need to do anything more. I can explore things for fun, but that's just because of the nature of who I am as a person. I like to learn, and I like to keep expanding. I like to see what other traders are doing. Not so much that I compare myself to them, but it's like maybe someone's figured something out that's like super genius, and you know what? I want to learn more about it. Okay. And I mean, I'll give you an example, and this kind of segues into the bias conversation, because I did want to talk about this, right? 3 ways to identify market bias, right? One of those ways is with using just straight up ICT market structure. So like I've shown you guys this from the start of our conversation, where I said, hey, are we inside internal or external range liquidity? If we are inside internal range liquidity, then I'm looking for a move bullish to external, right? So we have the external to internal idea for forming bullish and bearish bias. That's one way. The second way is how I use the daily EQ. I like to use the daily EQ, which is a dynamic level. It's formed off of the current daily candle. Once again, you can do this manually. The only issue with it doing manually is you have to keep moving it like your anchors. If price makes higher highs or lower lows beyond that range, like a new daily high or a new daily low, then you have to move the anchor. But that's okay, because you're using that level either as a bias anyways, and if the price is going higher or lower, like your bias is still going to remain the same, right? If you're using the daily EQ, like I'm bullish if price is below the 50% daily EQ, I'm bearish if price is above the 50% daily EQ, right? So if I go back to the 1 minute here, you'll notice that that 50% level that I marked off with Fibonacci is the exact same level as that indicator. Why do I use the indicator? Once again, I'm trying to make my life more efficient. And because this line is going to move by itself, it's clearly going to make my life more efficient and much easier to operate. And just a quick heads up, This indicator, dealing range indicator, is by one of our guys in our community, Finest, put it out for free. I love supporting people who are, obviously got good work ethic and have indicators that rock. So he's one of our guys. So like I'm 100% down to use it. He's actually made it even better in the sense of like the way like I personally like to use it. Like it's exactly the way I like it. So that's why I'm using it. I used to use another free one, but the problem with it was the offset was my issue. It only labeled this way over here, right? So if I went and used a replay mode, like let's say I use the replay mode back here, this daily EQ, because it's already played out, would be way over here. Whereas with Finest indicator, it's like perfectly set right here. So really, really nice daily EQ. I'll just show you guys one other thing too. So I have shared these free indicators with everybody. So here's the daily EQ one I'm talking about. And then there's also a checklist. I used to use a checklist, but ever since I downgraded my my account from Pro to Essential, I just realized like I don't use anything that Pro offers except for the alerts and like having indicators on my chart, like more than 5. So I was like, do I really need a lot of the indicators I have? I was like, I don't really need it. And it's like 50% cheaper. I was like, you know what? I don't really need all this stuff. Less is more. Maybe it's the minimalist in me. I don't know. But he did create a super amazing checklist with some pretty neat graphics and stuff that you can modify and stuff. Once again, the community is nothing short of amazing people here. I'm so grateful to be around all of you people. Seriously, there's just so many amazing people here. And we can all learn off each other. That's the whole point. Finally, the other thing I'll mention is the final way I potentially use bias, and that's using the stat map. There was another trader. His name is Colin Jones. Really nice guy. I got to know him, I think, last year. And even, last year I got to know him, and he uses the stat map. Now, the stat map is another 2 degrees premium indicator. And like I said, I support the 2 degrees movement and stuff. Like, I think they have some of the best indicators on the planet. If you want to support me, click my link in the bio. You can sub to these indicators here. I'm not sure if there's any discounts coming down the road, but maybe I can talk to Tu or Josh and see what they got going on. Maybe we can figure something out. But let's talk about the stat map. So when I was studying off of Colin Jones, the way he was using the stat map, to me, it was just such a smart way, because when I first started learning about the stat map, it was almost like I was using it to like line up my trades. And yeah, you can totally do that. There's nothing wrong with that. But I found that I had better success in terms of like using it in this way through the bias. Okay, so how does that look like? So the way my understanding of how I learned this is, number one, here's the indicator settings. I have the look back to maximum. The calculation method is set to mean. I'm using points. And then the key thing here is to anchor midnight. You don't want to have the true open, which is, I guess, Asia session. I want to have, oh, wow, it looks like I just won a giveaway. What the hell? I just had something tell me I won a giveaway. Hold on a second, guys. I need to see something. What did I just win? Oh, okay. I didn't win a giveaway. When winner of giveaway. Somebody just tag me. Hopefully I win something. All right, let's go back to this. Sorry, I just saw that tag. So the key here is to use the midnight anchor, okay? So what that does is it aligns the actual daily open from midnight, okay? And I'm using the 1-day chart in terms of the time frame. So I'm going to go to the hourly, and here's how I'm using this thing. When I show up to the market, and this really works well with the continuation trades, I will say, okay, in case you miss a reversal, right? Like, and this is kind of relates to what I was talking about last week. So if I show up to the market for, say, 9 o'clock, I'm identifying where price is moving. So by 10 o'clock, I should have an idea as to what to expect, okay? Now I'm just going to hit leave for a sec, just so we can see the whole chart. Okay, so around here, this is the 9 to 10 candle. I was actually bullish, and I thought, you know what? Price has closed above the 1-day plus manipulation level. I'm looking for a move higher. I thought maybe we can get a move higher here. And I actually got a little bit bored during the morning session, and I had shared some slight analysis here, right here. So I got a little boring right now, just running some higher time frame analysis. And right here, this is what it looked like at 10:13. This is what it looked like. I thought, we're for sure, like we've swept the low. We're moving up higher. It aligns with the 4 hour. I thought for sure there's a good chance we're going to hit this. I shouldn't say for sure, but I thought, this looks pretty good. The problem is you get news dropping like a bomb, and no pun intended, and it's going to destroy your setup. Now, what's really interesting about this is my bias using the daily stat map was to go long, right? So anywhere in here was the long idea, and of course there was no long setup. There was only a short. But what's really super interesting about this is the midnight open actually is where price rejects. Look at that. Pretty neat. And then we reject. Now, here's the thing. Just because my bias initially in the morning was saying, hey, go long from here to here, and then, of course, it goes lower. The thing is, the second price starts to now close in the opposite direction, like this candle right here. So this would be the 11 to 12 p.m. candle. It's the opposite now. You can immediately flip and start to look for lower prices because you have acceptance back below the one-day manipulation. So I'd be looking for a price to reach here. And look at the next candle. It tags it perfectly. And then the second price tags that and closes at 1 o'clock now, because it's a 12 to 1 o'clock candle. I can now flip my bias back to being bullish, depending on how it closed, because this is a sweep. So I love using the stat map in this way. I find it so amazing. And like I said, it's just clean. Super, super clean. Let's just go back to other days. Like if you want to see what it looks like on other days, because this to me, like I said, can help you to frame continuation setups that might fall outside of the kill zone, that might fall outside of the typical way you trade. So for me, I'm looking for H1 and H4 ERLs, previous daily high, previous daily low, Asia or London highs and lows to get swept. Let's say none of that's there. But let's say there's a 50-minute FVG, and I know that my bias is bullish, right? What I can then start to do is wait for bullish POIs to get tagged, like I had mentioned earlier, and I said, hey, there's a 50-minute FVG right here. All I got to do is wait for price to go in there, and then I can start to implement that continuation setup idea, which is wait for price to tag in here on the 15, go to the 1 minute, and look for price to dip in here. Maybe it creates a sweep. Who knows? Maybe it does something like this, right? Or maybe it's going to do something like this. Either way, whatever happens, what I'm looking for at this point then is SMT with the correlated asset. And that's part of how I'm looking at continuation plays now. And I talked about this in my last live, and I'm just going to reiterate it again today. That's how I would frame using the stat map with the continuation model idea. So I hope that makes some sense. That is how I rock bias for the most part. And this third way that I'm using bias is strictly like when I implemented the stat map idea with this type of continuation IFVG play, it was because I was trying to figure out how I can better align myself with the trend. And, if I'm looking at H4 bullish bias, that's one way. But to me, I found the stat map to be amazing. So if you want to sub to this, just click the link in my bio, click the 2 degrees trading view indicators right here. And if you want to support me that way, like I said, I will greatly appreciate that. And I don't ask anything of anybody really. I'm not charging anybody for anything. So if you'd like to say thank you, or if you'd like to support, that's a great way to do it, in my opinion. I would, like I said, I would really appreciate that. And just to go back now to the hourly, and we'll end on this. So we have the stat map. I just want to show you guys. Let me turn off some of this stuff, and I'll turn off the SMT. So this is today, right? Let's go back to the previous day. So that would be Friday and Sunday night price action. And just to show you what I mean. So right here is 7 o'clock, 8 o'clock. Here's 9 o'clock to 10, right? So 9 to 10, I'm looking once again, because we've closed above here, I'm still looking for price delivery to go higher. So in this situation, I'd be looking for a 15-minute pullback to like a FEG or something, and then a 1-minute move higher. I don't know what that looks like here. I think I had shared a bunch of charts on this anyways, but let's take a look. And it has nothing to do with the daily EQ at this point. It has everything to do with just time and the FEGs themselves, right? So given all of this chop here, like, seeing obviously price dip into this would have been more ideal, because this already got liquidated. I'm not sure I would be trusting any of these types of FEGs in here, especially like something here. And then you can see there's a gap here, and then the day continues moving forward. Now what's really interesting is during the next session, so price moves up higher, no FEGs, and then we have an FEG right here, right? Let's just take a look at this, because I think I had mentioned this, but we'll take a look at this one more time. So 50-minute FEG, we're looking for price to hit that higher stat map level, and this is what it looks like. And let's turn on SMT for a sec. Okay, so I just want to double check. So you do have like a super small FEG here. I don't know if I would have taken that personally. Like, you guys all know how I talk about sizing of FEGs. But let's just say you did take it. IFEG, is there SMT? That's the real question here, right? Let me just move it back. So it's showing SMT here, right? Double check one more thing. This candle closed at 2200. So you have a super tight FEG, you have SMT, you're inside of the 50-minute bullish FEG, and the stat map saying, hey, price should go higher, right? Just like anything in trading, nothing is 100%, right? So there's your stop loss, right? Okay, fine. Stop loss hit. Now you have a larger FEG here. Rejection, no confirmation, and new lows made. Okay, let's keep watching. Now, here's what's really interesting. Price sweeps right below the 50-minute FEG. Is there an ERL aligned with this? No, there isn't. Is there anything on the 5-minute that could help us? Okay, so there's a 5-minute sell side level here. Whether you want to start using 5-minute levels is up to you. I'm just trying to show you the market structure. And the key thing, too, is like, you're just looking for some sort of alignment, right, with market structure. Now, I mentioned how the size typically matters when I'm trading IFEGs with the daily, like my daily model. But here's an FEG right there, and you have the SMT, and remember that candle closed at 2200, right? Which would have been about here. The FEGs formed at 2200, and then 2215 price closes inside of the FEG, and then at 2230 price is now closing slightly below, right? But you have this IFEG that's formed here, and you can already tell this is whether let's just say you used a full 13 3/4 point stop loss. There's 1R right there. If you had used a tighter TP, 1R is like literally within 1 minute, right? If you want to go higher, there's 2.57R. So I'm just trying to show you this because it's just possibilities of why I'm using continuation plays the way I'm using them and what I'm looking for. And this is Asia session, guys. This isn't even New York. This isn't even New York. So anyways, that's bias in a nutshell. I put the stat map back on, and let me just go here and we'll take a look at another day, which would have been Thursday, I believe. Let's see what Thursday did. So Thursday, here's the 9 o'clock to 10 o'clock candle, and then the 10 to 11 reclaims that level. So you have a sweep. So this is where I was saying, like, if you get those sweeps underneath, we can then start looking for price to go higher, right? And this is a good textbook day of what I'm talking about. Now, I wanted something like this to happen today. Unfortunately, that doesn't look like it's happening. So that's how I use it in a nutshell. It's not complicated. It doesn't, like, I use it literally as more of a confluence type thing, not so much as like I'm basing my decisions off this. But the goal here is I'm always trying to find clarity on the chart. So if I can't find clarity in the ways I normally do things, then I'm going to try to start looking at these secondary options to find clarity in those ways. So I hope that helps. Yeah. Let me know if you guys have any questions. Oh shit, Josh was in the chat. I just noticed that now. That's hilarious. Oh my god, I was just talking about stat map and stuff. Oh my god. I didn't even realize he was in the chat. Oh man. Should have said hi. What the hell, man? All good, all good. Josh is a homie, man. What do I think about that short 10 minutes ago? I don't even know what you're talking about. Let's take a look. Probably talking about this. So, you know, once again, like I said, if I'm looking at this from like kind of the A plus way I trade, there's nothing for me to do here until sweeps happen. If I'm looking at this from continuation perspective, I know that price is moving off of an hourly bearish FVG, 50-minute FVG. Is there now anything that aligns up here? And like I said, part of it is making sure that there is SMT aligned with what's happening. So this is set perfectly. I don't see any SMT. Yeah, there's no SMT. So like for me, that's part of the criteria for me with those types of setups, right? I mean, if you're taking it blindly, and what do I mean by blindly? Meaning like if you're just using the daily EQ, I don't know if I'm okay with this because you have acceptance above the daily EQ. And that's a bit of a problem. Typically with these types of, you know, moves, we want to see, you know, I would say like at worst case something like this, but ideally we just want to see wicks snatching liquidity above it and then moving lower and closing below it. That's ideally what you'd want to see. But I mean, I see what you see here in terms of this, but I think if I was to look at this from a continuation perspective, and you know, the thing with the continuation idea was that I just go back to the stat map. The continuation idea was that, you know, I wanted to see price move lower, but because it already moved lower, I now want to see price move higher. So it's kind of hard for me to want to have taken a short like that. Ideally, I think I'd rather wait for the long. Now, what's interesting is I was showing this earlier. I don't know if this actually worked or if it's in the process of working. But you can see that price has now moved into that 15-minute level. And there's no SMT there that I can see. Actually, let me just put it back at the end. So I see like there's a super small FVG here and one here, but you know, I don't see any SMT marking off on my chart. I'm just going to move up to a higher time frame, see if anything forms. Doesn't look like it. I think for me, a lot of it, all it just comes down to that SMT. Like, I think I need to see that because I don't want to take any chances. I want to have as much confluence as possible into taking a continuation play, even if it's on, well, in this case, it would 100% be on eval. I would not take funded trades at this time. It would definitely be eval, but I would want to see SMT. So, I mean, price can do whatever it wants. Like, it's going to happen where it's going to, I mean, it'll still deliver where I want it to go, but I still think it's important as traders that we keep filters in place to hold us accountable, because remember, it's not just one trade that we're measuring our success on, right? We're measuring our success on, you know, a good amount of data, right? It could be a month, 2 month, 3 month, right? That's the only thing we can really do. So if you're going to take these, you know, riskier type of setups, definitely do it on eval for sure. If you don't have the SMT here, and let's say, you know, you're looking at something like this, maybe you stack these, like this closed way up here. So are you chasing this? I definitely don't want to enter up here. If I was going to consider taking this, I would be a chase, maybe a secondary entry. I don't know, but no SMT throws me right off. And like I said, it could still work. But seeing all this up here too, I don't know. But like I said, the stat map was showing a sweep of the low. We're looking for price to move higher, right? And expand higher to the other manipulation level. So this would support that idea, and not to knock it to death, but there's no SMT. So until I see a crack in correlation, I wouldn't take this. And the other risk too is like this isn't even fully swept. Like there's a good chance this could sweep this more and then form the SMT. And then we have more confirmation and confluence to the continuation idea. So another thing to look out for. Hope that answers your question. Does anyone have any other questions? Otherwise, we will wrap it up. I appreciate everybody's time today, honestly. I know I've been ranting for a while. What do I have on my SMT indicator? I think it's set to standard. I don't think I touched much. I think, if anything, it was just aesthetic. Yeah, I just changed aesthetics, I think. But, I mean, this is what my settings are. Yeah, all this stuff you can't change at the bottom. So it's just this. This is my settings. And this is a free indicator, man. This SMT3 indicator, it's so powerful. It captures everything. So it'll put stuff on that I don't even want sometimes. And what I mean by that is, like, when you have really choppy conditions like this, sometimes you get super tight SMTs. It's going to show it. But for the most part, it's done an amazing job for me in identifying SMT. Sometimes I have to just move up a time frame or two just to see if it catches, because sometimes it doesn't catch on like the 1 minute or the 2 minutes. So anyways, appreciate everyone's time. Hope that helps. And thanks, Bobby. Oh, appreciate you, man. Thank you so much. Thanks, Jack. I appreciate you too. Oh, Masterclass, you're too kind with the words, man. Just a guy, man. Just a dude. And I love talking shop, as you guys know. So all right, I'm going to stop the recording.